Hello, everyone, and welcome to today's edition of the Trade Ideas Market Recap. Today is Valentine's Day. It's Friday, February the 14th. My name is Barry Anderson, and I'm the moderator of the Trading Room. This is the Trading Room address, and you can log in as a guest or use your Facebook or your Twitter account to log in. Now, today was rather slow, at least I found it rather slow. Obviously because of the long weekend coming up. So I didn't actually find too many ideas that I actually traded. I did post three of them in the room. I will go over them a little bit later. But I thought what I would do today is I'm going to go over the odds maker just a little bit. And the reason I'm going to do that, well, there are two reasons actually. Let me bring this in and show you that in case you didn't see this, we're offering the odds maker right now for under half price, and that will be from February 14th to February 28th. And this is a tool that it's a great tool. I don't know how else I can describe it other than saying it's a really good tool. I use it in order to backtest my strategies. Once I have my strategies, I have to know whether they're still working or not, quite frankly, because not a strategy doesn't necessarily work forever. It'll degrade with time, depending on market conditions and all. So the odds maker is just a great tool for me to test my strategies all the time. And the other thing here is that if you're a new subscriber, you'll get 50% off your first month as a new subscriber. Now, let me just bring this out and just talk briefly about the odds maker. And people have asked me, I've referred to the odds maker on some of my strategies here. I've said this is odds maker tested, these are odds maker tested. And people have asked me, well, what do you exactly mean by that? So let me just run the odds maker on this particular strategy. This is a new one I'm starting to get into. And it's simply in the window, I just right click and I go run odds maker. And I have some settings in here where I'm going to take the trades from 7 in the, now this is West Coast time, 7 in the morning till noon. I'm going to hold the trade for 60 minutes and I'll get out if it moves against me by $1. This has all been optimized using the odds maker. So when I click on the simulate buy, it will, and I hope you can appreciate how quickly this is running through all the permutations and combinations and trades that could have possibly taken over the last 30 days, because that's basically what it's doing. It is checking over the last 30 days all of the situations in which the filters were met and the trigger was met. And so you can see right here, this is the equity curve. So I've put in $25,000 as starting equity. I believe most people in the States need that to be a pattern day trader. So that's why I've got that in there. I've committed $10,000 per trade. I put a commission of $5. I'll explain slippage just a little bit later. And the buying power is fine. I mean, most people have at least 4-to-1 buying power that they have available to them with their equity. So we're well under that. The 60,000 is well under the 100,000 that you have available. So you can take a look at this equity curve, and you can see this. It starts at 25,000, and it ends at, well, 35,000. And this top line here is the equity curve if you didn't have to pay commissions, which of course is ridiculous. So we all have to pay commissions. So I've put in $5 as the commission that we'll pay, and that's $5 on the buy and $5 on the sell. So that brings the equity curve when you subtract the commissions out down to here. And then this is the what I call the real world equity curve, the real world number. And that's because you've had to add slippage in. And all slippage is, if you don't know, is let's say we get a trigger at $10, and by the time I actually enter the order into my brokerage platform, I get a fill at 10:05. So in other words, I didn't get the best possible fill that the odds maker thinks I'm going to get, and I've slipped 5 cents. And so now, based on this strategy, I'm holding for 60 minutes or $1 if I get stopped out. But in this case, let's assume that I'm holding for 60 minutes, and at the 60-minute mark, the odds maker sees that the price is $10.50. So I've made 50 cents if I can sell it at 10.50. But again, by the time maybe I make the enter the order, I actually sell it at 10.45. I don't sell it at 10.50. So I've lost a nickel there too. So that is what slippage is all about. Now, of course, you can always, if the trigger is at 10, maybe I get it at 998. Maybe it goes down a little bit, but we should always put a slippage factor in. So anyway, this is what. So we started with 25,000, and at the end of the month, we ended up with 32,000, which is obviously a tremendous return. Now, will this keep working like this? We don't know. I mean, right now we've got a nice looking curve. It's basically, except for this little jog here, this little spike, but it's basically at a kind of at a 45-degree angle, which is what we like to see. So, but if I saw this starting to come down like this, then I would say, okay, this is starting to not work as well. It's a long strategy. Maybe the market is trending downwards. So perhaps I have two things I can do. I can take a look at some of the filter settings and maybe tweak them to get them and see what would happen there. Or I literally just put it away for a while and maybe bring out some of my short strategies and concentrate on those. But you can see how easy it is just to test them. I mean, again, I can go the run again and simulate the buy, and you can see how quickly it does it. So it doesn't take anything for me. Virtually every day, at the end of every day, I do this with most of my strategies, just to see how they're doing. So that's just a really basic overview of the odds maker. And so again, it's taken every trade over the last 30 days where the trigger has whatever the trigger is. I think it's a break of the cross above resistance is the trigger, and all the filters have been met. And so when it crosses above the resistance, I take the trade. And it's as simple as that. So now let me just back out of the odds maker and close this down. And now we'll take a look at a couple of or three of the trades that I did do today. And the first trade was IPG. And IPG came from this particular setup, and this is a bit of a bounce play actually. And the trigger was at 956. So 956 was right here. And so you can see how it's bounced. It's bounced up, and the actual trigger price was 1645. So you can see that this is what Trade Ideas was alerting me to, this little bounce area here. So I was able to take the trade at 1649. But if you watch my blog yesterday, you'll notice that I put the SPY up here just as a comparison to see what was happening with the stock compared to what the SPY was doing. And you can see, yes, it was kind of neutral here for this area, but you see how right up there, SPY started to move up and it basically in a nice trend up. And right here, it was just flat. So again, I look at that and I say, this is not following the trend of the market, and I was really anxious to get out of the trade. And what I actually did was I exited the trade for a loss at 1641, and it's just one of those things. If the trade is not going to give you what you're looking for, especially if the market is supposed to, in theory, be dragging a bounce play up, then just exit the trade and move on to the next one. The next trade I did was MUR, Murphy Oil. This came from here, this particular strategy at 1020. Let me just back this up a bit. At 1020, which is right about here. And this is more of a momentum play. It's not so much of a bounce play at all. And the trigger price was 59.67. Right in, oops, sorry, I should get rid of the comparison so we can get the numbers here. Let's move this over. Okay. So it was the alert was actually right in this area here at 59.67. So right in this area here. And you can see now I missed this. I actually did miss it. I was probably doing something else. I got the alert and I watched it. But what I did do is I said, okay, if it does break over the whole number and holds for a while, then I'll take the trade. And that's in essence what I did. I took the trade at $60.02 and I exited the trade at $60.32. I was actually hoping for a lot more. I thought maybe again with the market sort of trending up that this would just keep moving up, but it didn't. And in essence, that's where I ended up taking the trade. And it moved down, so I was definitely happy to get out there because obviously I would have been stopped out. And I actually missed this bounce here. Some of us in the room we were talking about it, and we missed this bounce here and here. So good example of never lose sight of a trade, especially one. Well, when I get them in here, that usually means they're dynamic for the day. And I think I was just out of boredom. I just kind of forgot about it because nothing else was happening. And the last trade I took was NR. And this one came from this strategy also. And this was at 1129, so right about here. And you can see again, this is a momentum strategy. So you can see I had an expanding 2 minute, these are 2 minute charts, an expanding 2 minute candle there and one right there. And so I was able to get into the trade a little bit later because it was 1162, but not too much later. So I got in the trade at 1168 and I took the top, I exited half of it at 1192, and then as it chopped around, I was really hoping that it would break through 12 in a big way, but it just couldn't. It kept bumping up against 12, and so at 1190, I exited the last half. And those were the three trades I took. As I say, it wasn't a very exciting day, but again, to be expected because of the long weekend. So I just want to bring this back again, just to again tell you $500 for the Oddsmaker for the next couple of weeks. It's a great tool. You can back test using it, and this is a one-time fee, so it's yours for life. And also just bring back the way to get into the room. This is the room address. We're here, say 9 to 4 p.m. Monday to Friday, obviously Tuesday next week. And I hope to see you in the room. We've got a great bunch of creators in there. And good trading to you. Bye-bye.